Welcome back to ICT Trading Concept. How are you all? I hope everyone is cool. So this is Thursday, 14th March 2024. After the session, I am here with the daily recap. I promise you guys, if you watch this video, you will get an idea about trading, okay? Which you are not going to get from anywhere else. First thing first, this is Thursday, so it will be the continuation of the expansion. So if you have already watched my first daily recap video from Monday, you know that I was expecting this consolidation around Monday. This is the accumulation phase. Then in Tuesday, I was expecting higher run because that will be the manipulation. So Tuesday we got that manipulation. Wednesday, that means yesterday, I was expecting lower run. So that was the expansion. And Thursday it will be the continuation of the expansion. I told that yesterday's daily recap video as well, so I will put the link of that video, yesterday's daily recap video, at the end screen, or you will get it from my YouTube channel playlist called NQ Daily Recap. Okay, so you will get that from there. So today I was expecting the continuation of the expansion toward that sell side liquidity, and below this sell side liquidity, that was our extreme sell side liquidity. I told that this sell side liquidity is going to be taken. So that was like, I am not telling you about the hindsight. Everything I will talk here, I did it in my live in front of near about 200 people live. Okay, so this is not hindsight. Now here is 15-minute chart. There is my sell side liquidity. Just keep remember, this is the new day opening gap, and here is the new day opening gap. Okay, when price was here just before the 8:30, I saw this related equal lows. So I'm gonna mark that related equal lows. That was my premier, what to say, what is that word, I don't know, but this is the first sell side liquidity. Okay, now here, this is the 15-minute fair value gap. You can see this candle low, that candle high. This is the last fair value gap from 15-minute chart. So price came here around the London session. If you are expecting lower run, you will expect the higher run at the London session. That will be the Judas swing. Okay, here, when you are expecting lower run, you will expect the higher run from the London session. So this was the London session. Same thing over here. It went higher at the London session. It fell at the New York session, morning session. Then retracement, continuation of the falling to the PM session. This candle and this blue line, this two blue line is actually the New York morning session. Remember, this is the 15-minute last fair value gap. My bias is bearish. This is premier primary sell side liquidity. Okay, now I'm coming in 1-minute chart. Why I have marked my New York AM session from 8:30? The reason is around 8:30 we had a news, that is the PPI news. Okay, so first I will talk about the PPI news. I took that entry. If you are with me in my Twitter, you already know that I took that entry. Okay, market went higher a little bit, it went lower. Now where is the last fair value gap? There is your last fair value gap. I already talked about this last fair value gap concept. If you are confused, you can check my YouTube channel. When before 8:30 I saw market went little higher, take that buy sell liquidity. Okay, so this high and this high, they are relatively equal highs, so market has taken that buy sell liquidity. Buy sell liquidity has taken. Then I got a very nice market structure shift. There was the market structure shift for me. I took that. And where is your fair value gap? There was your fair value gap over here, just here. I can't make my stream, the video much more longer. That's why I'm unable to show you the entry. But if you are with me in my Twitter, I have already posted that entry. Okay? So I actually took my entry to that fair value gap. My stop loss covered that last fair value gap. Okay, I just covered that last fair value gap. The reason was this was the news, so I wasn't confident that the volatility can reach until that last fair value gap. That's why I covered that last fair value gap. And over here, where is your sell side liquidity? Actually, the sell side liquidity was here. You can see this low and that low. They're very clean lows. Okay, over here. So this is your sell side liquidity over here. So until that sell side liquidity, I hold my trade, and I told that market is going to tap to that new day opening gap. So that was the first entry. It was near about 1:2.57, and the handle was near about 330 handle. Okay, so not a bad trade at the beginning of the New York AM session. That was a very nice trade. I hope you understand that setup. Price came to this 15-minute fair value gap. At the same time, this is the 1-minute last fair value gap over here. Okay? So inside this 15-minute fair value gap, this is the 1-minute last fair value gap. This candle low, can you see it? This candle low and that candle high. So this is the 1-minute last fair value gap. I'm gonna change the color. You can see price came to this 1-minute last fair value gap perfectly here. Then it was just consolidating around that area until the 8:30. Around 8:30, price came one more time to the consequent crossment of the 1-minute last fair value gap, went lower, take the buy side liquidity, give me the market structure shift. There was the fair value gap. Because of the volatility, I covered that last fair value gap. Okay, and then market came here. That is the news. Okay, PPI news. I took that entry to my live account. So that is the first entry from the New York AM session. Now, after the New York AM session, still I'm bearish. Okay, still I'm bearish. I was bearish until that sell side liquidity. Remember, this is that sell side liquidity from 15 minutes. Remember, this is that sell side liquidity. So after that setup, I have to wait until the 9:30 open. Okay, so I have to wait until the 9:30 open to take another entry. Now, after after 8:30, market was consolidating. See how beautifully market was consolidating, and around 9:30, this is 9:30 actually, market went little lower, take the liquidity, went higher, take and clear all of this liquidity. All of this liquidity has been cleared over here. Okay, at the same time, where did it trade? To the consequent encroachment of the 15-minute fair value gap. So I'm going to remove that 1-minute fair value gap from my chart. This is that 15-minute fair value gap. See how beautifully it has traded the consequent encroachment of that 15-minute fair value gap. At the same time, it has been traded that 1-minute last fair value gap. So this is the 1-minute last fair value gap. I will show you more precision over there. Okay? So around that 1-minute last fair value gap, where the body closed to that 1-minute consequent encroachment. See, 1-minute last fair value gap, consequent encroachment. That means the last fair value gap from 1-minute chart consequent encroachment didn't broke by the body, and also the 15-minute last fair value gap consequent encroachment tap like the bodies. I mean just the wick tap over there. After tapping over there, market went lower. So I actually outlined that entry. This is kind of entry you can't wait for the setup. That means market structure shift and fair value gap entry. You can't do that. You have to take the entry when market will close below that 1-minute last fair value gap. You have to take your entry over there. There, the high should be your, I mean, the extreme high, and this will be your target. Guys, I also outlined that entry to my live. I just outlined that one. Now here is another opportunity. I mean, if you want to take another kind of entry, you can take that. That is actually this fair value gap entry. It is called the entry fair value gap. Sorry, first fair value gap entry. I didn't talk about that fair value gap yet, so I am not recommending it to you right now. You can just go for that 1-minute last fair value gap entry if you want. If you want to let it go, just let it go. So overall, this was the setup until here to here. I did it in live. This is not hindsight. So this setup is going to give you 1:5 risk to reward ratio, and it's near about 99 handle, so 100 handle. Not bad. Okay, if you think it's very difficult for you, don't go for that trade. There is nothing wrong. Then price came here. I told that market is now going higher, and it perfectly went higher. Okay, when it went higher, I have nothing to do the morning session until for the second or the next setup. Now where is your next setup? So this fair value gap has done its job. Now when market went lower, take that sell side liquidity, look for the another fair value gap from 15-minute chart. Here is my only fair value gap. There is no other fair value gap. So I'm gonna mark that only fair value gap from 15-minute chart. I'm gonna mark it as my 15-minute fair value gap. Now I'm going to go 1-minute chart one more time. That sell side liquidity has taken, so I'm gonna remove it from my chart. So after trading over here, your extreme sell side liquidity is here. Market is coming here, so still you are bearish. Market went little higher. This is the first time when market reached to that area, to that 15-minute fair value gap. Now it went lower. Was there any market structure shift? No. Then market went higher, tap to the new day opening gap low. See here, it has tapped over there. Then it fall lower. There was a market structure shift. I took that entry and I got stopped out. Okay, here is the part, guys. When market went higher to that 50-minute fair value gap, this market structure shift was perfectly valid. Okay, this was a valid market structure shift. This is the first fair value gap. This is the last fair value gap. So I took entry over there. My stop loss covered that fair value gap, and I got stopped out. Okay, so that doesn't mean I'm wrong. Market was overzealous, so it went higher one more time. Where did it came? Let me mark it to that 1-minute last fair value gap. Perfectly, it came here. Okay. Then it went lower, and it gave me another opportunity to take the entry. Now, when it came here to that area and it has taken that high, it went lower a little bit. I took re-entry over that area. Okay. You can ask me why I took that entry. Because of the breaker. Here was the breaker. This was the breaker, right? I am showing you the setup actually. Don't worry. So high, low, higher high. The lowest down close candle is your breaker. I took my entry over there when candle actually closed. Just it came to the breaker. Inside this breaker, I took my entry. I did it in my life, and my target was only this low. I didn't look for any other lows. So over here, I took my entry over there when it had just tapped to the consequent cosmet of that breaker, or the 50% of the breaker. My stop loss was over there, and that was my target. That low was my target. So this was near about 1:1.85. Not a great trade, but yeah, after a loss, when I got that entry, I just took that on. But if you don't want to take that entry, and if you want to wait for the perfect setup for the breaker, you will just make it here and see. When it come back again to this breaker, it never break the breaker. So your entry has to be here, and your stop loss will cover the breaker. So it will cover the breaker to here. Where should be your target? Your target has to be this new day opening gap, because there is no other sell side liquidity. But this new day opening gap is very strong. So you can see later market went lower, and maybe it has taken, no, it didn't take that low. Instead of that, it has actually rejected from the rejection block. So this is the rejection block from the candle. See how beautifully it has been rejected from that rejection block. But you are not going to hold your trade until here. You will take that entry, and your target will be the new day opening gap, because this new day opening gap has the power to stop the price and send it back higher. Okay, it has that power. So you have to take your entry to that breaker. Your stop loss will cover the breaker, and your target has to be the new day opening gap. What you can do, you can actually take the high as your target or the low as your target. It's up to you. But if you ask me, I will tell you to go for the high of the new day opening gap as your target. Still, it's 1:2 is risk to reward ratio, and 43 handle, it's not bad. So this is a valid entry. Don't think it's not valid. Okay. So later when price came here, I saw this market has made relatively equal lows here. Okay, so this was another relatively equal lows. So new sell side liquidity. Now when price came here to the new day opening gap, went higher, I didn't take any entry over there. Okay, that was the lunch hour. You can see after 12, this is the lunch hour. but I would love to show you the precision. This is the last fair value gap from 1 minute chart. Where did price came to that 1 minute last fair value gap? Is that random? No, it's not random. After trading over there, then boom, market went so low. Okay, so that was the lunch hour, so I didn't do anything over here. Now I will go to 15 minute chart one more time and I will explain the PM session trade. I have outlined maybe 9 trade today. I don't remember exactly, but maybe near about 9 trade today I outlined. So I was wrong for one trade, sorry, 2 trade, and 7 trade was profitable. So from 1 p.m. to 4 p.m. Okay, so here 4 p.m. This is the PM session. Still, price was over here around that area. This is the 15-minute last fair value gap. Okay, there is no other fair value gap. So I'm gonna remove all the level from my chart so that it is easier to understand. Market has made this new relatively equal lows. That is my new sell side, primary sell side liquidity. I have this 16 sell side liquidity, and I need a level. So from there I can frame my trade. Okay, so this 15-minute fair value gap is that level. It is still valid because nobody closed that fair value gap, so it's still valid. I'm gonna use that until it's fully closed by the body. I'm gonna keep it to my chart. I'm going to 1 minute chart one more time. So you can see after, I mean, around the what to say, I mean, lunch hour, market really went lower. Then after the lunch hour, when the 1 p.m. appeared here, that means the PM session, market started to go higher. Now, when it started to go higher, I didn't participate here. Okay, I didn't participate over here. Market went higher. Where did it came? To the consequent encroachment of that 15-minute fair value gap. Remember here, to the consequent encroachment to the 15-minute fair value gap over there. Same thing here. Look how beautifully the body is closed around that consequent encroachment of that 15-minute fair value gap. Price went higher. I outlined that setup in my live. Okay, so I saw market has taken all of this liquidity here. So this all the liquidity taken, market has taken all of this liquidity. This swing high, that swing high, all of this liquidity has been taken out over there. After taking this liquidity, market went higher one more time and gave me a very nice market structure shift over there. That is my market structure shift. After shifting the market structure, where is your fair value gap? I can see here is your fair value. So you are going to frame your trade from a 15-minute fair value gap. So okay, so not from a random level. This is a level where you will frame your trade. So this is your first fair value gap, and there is your breakaway gap. So what is the rule? You have to take your entry to that first fair value gap, and your stop loss will cover the breakaway gap. So you will cover the breakaway gap. Where is your target? See this primary what to say, sell side liquidity. I'm not telling you to go for that sell side liquidity. I'm just telling you to hold your trade until that primary liquidity. Okay, so here that is the trade, and you can see it's near about 1:11 risk to reward ratio, and the handle is near about 109 handle. Okay, now you can tell me, brother, why I should go over here where there is this new day opening gap. Now the thing is, when market broke this new day opening gap for the first time, next time you can expect it will react. You have to expect that. Again, when this new day opening gap is broken, that means this new day opening gap has been broken. It should not give you the respect. First time broken is the fake breakout, but next time broken is not the fake breakout. It's the confirmation of the broken fair value gap. So I'm seeing this, it's broken. So you can hold your trade until that fair value gap, or if you want, if you don't believe that no, maybe it's not going to happen, so you can frame, target to that new open gap again. Okay, there is nothing wrong, and you can see it's near about 59 handle. Still, it's not small. 1:6 risk to reward ratio. Okay, so it's still a best entry. You can see market went higher to that last fair value gap or the breakaway gap. Body didn't close at the level or above the level of the consequent encroachment of the breakaway gap. Then there is the order block. How perfect the entry was. Okay, this is the order block. Price straight to that order block. There is the mean threshold. This level is the mean threshold, okay, of that order block. Perfectly tapped to the mean threshold, went lower. Market came back again, retraced to that, order block, broke lower. Now when market went higher, from where did it go higher? I know it's random. It's a very random level, right? Where is your first fair value gap? To that leg. Is there any other fair value gap below this fair value gap? I can't see any other fair value gap. So this is your last fair value. Okay. So I'm going to mark the last fair value gap as well. So this is going to be my last fair value gap. Just above the last fair value gap, where is your entry fair value gap? Can you see any other fair value gap? I can't see. So this is the entry fair value gap. Price came here to that entry fair value gap, went higher, retest the order block over here. This is called retesting order block. At the same time, it tapped to the low of the 15-minute last fair value gap or the only fair value gap. It tapped over there, break lower. It went through this last fair value gap from 1 minute chart. At the same time, it has broken the new day opening gap. How beautifully it has broken. Look at this candle. I outlined this trade as well. I told that either you can take your entry depending on that last fair value gap. Your stop loss has to be have very tight, okay, very tight. It has to be just above that last fair value gap. So even if you are wrong, you are not going to get a huge loss. So 700 loss you are going to get. But if you are right, if your reading price action is absolutely right, you are going to get near about 45 handle. So it's on 1:6 risk to reward ratio. That was also outlined in my live, and everyone was writing boom over there. If you're confused, if you don't believe me, you can watch my live. Okay, 13th March 2024. And I'm sorry, it's not 13th March, it's actually 14th March, Thursday price action, New York PM session price action. Okay, so there was another setup over here. Now I'm going to frame another setup. Then market went lower and take that extreme sell side liquidity. I told that market is going to take that sell side liquidity. I'm not sure it's going to take that one or not. When price has taken that liquidity, it was already more than 330. Okay, so after 330, when it has taken that obvious sell side liquidity and it went higher dramatically. Okay, so this swing high is valid for shifting market structure. I got the market structure shift over there. So that was the market structure shift. You see where is the first fair value gap and where is the last fair value gap. So this is the first fair value gap over here, and this is the breakaway gap over here. Your entry will be to that first fair value gap. Okay, over here to that first fair value gap. Now you can say, brother, it didn't tap to this first fair value gap. Yes, sometimes it will go from little above of that fair value gap. That's why I told you not to wait until the first fair value gap. Try to push your button when it is very near to that first fair value gap, maybe one handle or maybe one tick above. Okay, and you have to cover the consequent encroachment of that breakaway gap. Now you can ask me, why every time you tell us to cover the breakaway gap, now why you are actually telling us to cover the consequent encroachment? The reason is, look at this breakaway gap, it's too big. Okay, it's too big, and comparing with your entry fair value gap, it's too big, so you can't take more risk over here. But if you are able to put your stop loss with 24 handle stop loss, please go for that. But for me, if I see it's more than 24 handle, 18 17 handle, more than 17 handle, I would love to push my stop loss just below the consequent encroachment of the breakaway gap. Okay, and where should be my target? My target has to be this new day opening gap low. Now you can say, brother, why this low, why not above? If you have more contract, then you have to take a partial here, and you can target the last fair value gap from the 1 minute chart. I know it's random, but I'm showing you how beautifully the randomness work. Where market went to that last fair value gap to the 1 minute chart. Is it random? No. So you can take that entry as well, and you can see it's near about 1 is to 6, near about 6, and you are going to get 100 handle. Okay. Now, easily I could tell you, brother, put your stop loss over here, and I can show you 1 is to 10 risk to reward ratio. But that will be a lie, because you can't put your stop loss over there. You have to cover the consequent crossment of the breakaway gap, because market can reach until the consequent crossment of the breakaway gap, like over here. Though it closed that breakaway gap fully over here, can you see it was a very small, so I just covered the whole fair value gap. But here, as the fair value gap, the breakaway fair value gap is much bigger, so I am going to cover the consequent crossment. If you are able to cover the whole breakaway gap, that's the best idea. Okay, that's the best place to put your stop loss, as that was kind of big stop loss, so I will put it over there. If you have one contract, you have to close your trade over here. You have to, there is no other way. But if you have more than one contract, then you can take a partial here, and you can let the rest go until the last fair value gap. You just can't go for the liquidity. Remember guys, you just can't go for the last liquidity, because the last fair value gap has the power to stop the price, send it back. Okay, so always remember that the last fair value gap has the power. And if you are actually going against your bias, because your actual bias is this sell side liquidity. So that was another entry from today. In short, this is all for Thursday, 14th March 2024. I hope guys it is little bit insightful, and it will be helpful for you to understand the price action, the way I trade. And I believe thus studying all of this video, you are going to increase your level of trading. Okay, so until the next video, cheers. At the same time, if you are new, please don't forget to subscribe to my channel. Don't forget to give me a thumbs up. Okay, so see you guys, bye bye.